What's happening, guys? I hope everybody had a fantastic weekend. We've got another Sunday scan coming at you for 12/12/22 and the week ahead. Got a lot to talk about. Gonna condense it as always. At least I try to anyway. Doesn't always work out as planned. That said, we've been talking about getting long more often, being aware, building in swipe risk, as well as many other things that kind of have prepared you for the action over the last week. Whether or not you're getting along, whether or not you're participating, that's fine. But being aware of it and not getting blown out on the short side, is an edge in itself. Knowing not to step in front of that stuff, seeing the warning signs. And, although maybe I did not execute in the manner that I would have liked and gotten along as much, avoided some pretty good disasters, right? So, RMEG, we talked about last Sunday, and that really worked out exceptionally well on the swing side. SMMT was a wild move. It reminded me, we talked about, or quite often we talk about a prior move that reminds you of a current one. And I just had watched an interview that Lance had done, and he was talking about, kind of where have I seen this before? And I'm like, man, he's speaking my language, because that's exactly what I do. And so this SMMT reminded me of VTNR. VTNR was a trade back. I even remember the day. I was at the lake. It was a tough trade to get right. It just should have died so many times, and it just kept on coming back to life before it had some crazy squeeze out. And so it reminded me of that, and that is why the next day I was interested in getting long. And I got long on the swing versus the 260 level. And 260 is not necessarily just a flat stop at 260s, but over and under that level. And as long as it was holding that level, I was going to let it work. And as you saw, it had a nice squeeze out. Really worked out. It actually closed towards the highest point, maybe off by like 30, 40 cents, but still. It's just a crowded trade, and everybody's looking to do the same thing. We had PHVS this week. And AMAM, as well as even CLRO. Maybe CLRO wasn't as crazy, but it still had, some of those signs that you had to be aware of. So one of the things that we talked about last week, and what we talked about every single day in the room, is building in swipe risk. What does that mean? That means that if you are getting into a position and you're not okay with a swipe right back up, then you're in too big, especially in this market. Not always the case, right? But it's always about adapting. What can you do in your trade to make sure that you protect yourself in the event that, you're wrong, in the event that it swipes? You know that SMMT is swiping randomly, swiping folks out. And if you guys remember, we talked about on Twitter as well as the room, but you saw all the big offers and you saw that trap. I posted that. To me, it felt like they're doing something here. They're trying to make you feel a certain way. There's a 1.6 million offer, then there's 500K offers, 300K offers, and they're making it appear extremely thick. They're making it appear like it's not going to go above that level, and then it starts to fade off. They're in no rush. Fades off, comes back, fades off, comes back. And then guess what? The offers are gone. Swipes into a circuit hall, right? So we know that that is possible. We know from the day before that that's possible. And so at this point, you should be really hands off and be aware of it. Fortunately, I was long because that morning you saw I was getting long versus the 260 level. And that swipe in circuit hall was awesome, because then you've got some size and you're immediately up, quite a bit. So then you can kind of let it work. Whereas, normally you kind of size into a position and it's like, maybe I should take some off because I don't have much of a padding. When it swipes up, it's nice because you can let that padding work to your advantage, and then hopefully it continues to go higher. But anyway, SMMT showing you the signs, the swipe risk, right? So the next morning, PHVS. PHVS was another one where I was fading at pre-market, but we kept on seeing that 420s were absorbing. The one time it broke under 420s, flushed under, where does it come right back to? 420s. That is a sign. That is a sign that flush gets caught, right? Every time it starts to break out, slams down, it holds the 420s. In this market, just like we talked about the last week and the week before, in this market, it's not about being a hero and trying to get the short and this and that. It's about kind of staying alive right now or joining that trend. And, you know, unfortunately, PHVS, I normally would get long in that situation. I'm usually pretty good at those, but not so much in this. I got SMMT, but PHVS, I did not. And unfortunately, you know, that one swiped into a circuit halt. But I'm not saying it's easy. I'm not saying that, you know, I got it long. I'm not taking credit for any of that. But what I am saying is the signs were there, right? And we talked about them in the room constantly. Hey, it's absorbing well here. Be cautious. And I even said, I think it was around 11 a.m. or whatever, but it's 50-50 here. There is no edge. It's exactly what I said in the room. There is no edge. So if you're still fighting that, if you have any size, that's on you. And it's not to throw salt on the wound. It's not to push you down. We all do it. I've done it. But the signs were there. So sometimes the greatest edge is just no trade at all, right? And that's basically what I wrote in the room. There's no edge at this point forward until, you know, something happens. Does it break down and it stays heavy at 4? Does it break out and goes nuts? We don't know yet. But until one of those two things happen, no edge. So then the next day we had AMAM. And I actually was fading at pre-market. But we talked about 120 level, absorbing until 120, exhausted out, failed, exhaust out, failed, right? Until it actually peaks out. There's no edge. So it flushed under 120s, came right back up and absorbed. What's that mean? We just saw it on SMMT. We just saw it on PHVS. So to sit there and say, I'm going to see what it does, knowing that the price was under 50 cents, now it's around $1, and the circuit halt bands are very, very close. Is it worth the risk? No. So I was actually very happy with the way that I traded AMAM on Friday. My risk was in check, which, you know, not to say that it normally isn't. Most of the time I'm pretty proud of my risk. But this particular time, you know, I saw it trapping, and I did the right thing. Can't always say that. You know, sometimes you get caught in certain circuit halts and it's annoying and you get this slippage and this and that. But I felt like, and I posted the chart in the lounge for you guys to see, where I started in about $1.10 average or so, stopped out 120, 125, started like I think it was 240s and stopped 250s, and then got a tiny amount at like 420s, but most of the size at 3 with a target of 220. So it went down to 214, almost based at 220, but then it ended up squeezing out the rest of the day. One of the things is sometimes it's just not worth it. It's not worth your time. You know, if you're sitting there and you're like, it could go this way, it could go that way, could go this way, it could go that way. Realize that. Realize that you're having a conversation with yourself. Which way is this going to go? I want to be confident. I want to be confident on a trade in order to take size. I can't get confident on these types of trades, right? Unless you are long side and you're good with the particular risk that you've set. But in this day and age, with circuit halts and all the games that they play, it's not worth it. So pre-market, each day last week, we talked about swipe risk. That's basically building in, you know, risk for that swipe. Are you going to be okay if it swipes up into a circuit halt? If you're not, size down. And so SMMT did exactly that. Great trade, flushed out. It came right back to prior support levels. Reminded everybody in the room, hey, make sure you're proactively covering. Guess what? If you didn't, swipe right into a circuit halt. Now, 1, you should lock in anyway. But 2, if you didn't, at least you were sized appropriately for that swipe. It's not always going to be the case. This is part of adapting. It's part of the current cycle that we're in. Right now, FOMO is exceptionally high. And if you don't admit that, if you don't realize that, you're going to continue to get clipped, right? It's not about, well, this shouldn't happen. This should fade. This should do this. It should do that. It's about what is happening right now. And until that crowd, that kind of passes, that cycle passes, you should assume that they're all going to do similar things. And CLRO was no different. And you start to see the 130, 140, 130, 140. Then 140 starts to become peak, right? So I'm always adding a new line each stage that it gets. And that becomes the new level that I want to see kind of peak out, right? So if 130, 140 is the channel, and now 140 becomes the base, now I need to pay attention to the next spot where it starts to, peak out at. And so that level was 165. So we talked about that. Once 165 exhausted, we got the nice clean fade. But if you were emotionally attached at any of those prior levels, you're going to get run over. So again, not an easy market for small caps, especially if you're trading size. So an edge in this current market is 1, trade less size, 2, build in swipe risk, 3, avoid. There's so many others that are there that are available to trade that, the 2 or 3 main ones that everybody's excited about, sometimes your edge is just take them off radar. You don't have to get there. You don't have to trade it. Trade it after everybody gets exhausted. Because here's the thing. If everybody's trading them, everybody's bent, everybody's waiting for the same thing to happen. When it doesn't happen, it swipes that much faster. And when it does, it's very crowded because everybody's just finally getting out. They just want to get break even. So there's a lot of competition. I want to trade where there's less competition. So that's really it. That's really what's happening in this market. We talked about that moves are getting absorbed. So you get this first big day, consolidate, week open, kind of comes back, right? You saw it on Momo, you saw it HUYA, you saw it on a lot of these China type plays lately. And you just need to be aware of what the market is, rewarding at this point. And that's really it. It's tough in small cap land to take conviction, to take size. And I haven't been sizing in on those at all. I think I say it every single morning on the broadcast. My old me, 3, 4, 5 years ago, yeah, I would be trading those in size. I'd probably be getting clipped. But for me, my own personal journey here, I don't want those crazy headaches. I don't want to go for rides anymore. I don't need to. My goal is just to have, as least stress as possible and be as confident as I can when I get XPEV, NEO, AMC type of opportunities. I don't need to do that on the thin low floats because those are the ones that are going to break my account if I'm wrong and I'm sized in. And that's why over the last 2 years, it really hasn't been a focus. Sure, I'll trade them, but I just won't borrow as much size. I won't get as aggressive because it's just not worth it. We've seen it again on, all these little thin ones, after MEGL and HKD and all those other ones, fortunately kind of saw that coming. And that's kind of when I, once again, reminded you guys it's not worth it. Stick to stuff with proper edge that you don't have to worry about every single tick. Other than that, let's see. Quiet bull market we talked about. That's still kind of, there's an underlying quiet bull market in these thin names, while everything else is just doing whatever it wants to do in spy land. And I think that's pretty much it for what I had, prepared. The IRA strategy I had, sort of a bullet point there. When I built my IRA in 2020, 2021 to, a ridiculous level, it was a market like this. And I've been a little bit slow of getting there right now. I'm starting to kind of, spread. I used to have like 30, 40 names and just kind of put in a few of the basket that was working. And as they go, start to scale up and ride them. And as you've seen, even something like TOR, T-O-U-R, another doubler. Well, I wasn't there, but throwing a couple shares at all these different charts that are panning out, most of them are panning out well. If they don't, they typically kind of consolidate, go sideways. And maybe a one or two here and there kind of end up, failing and fading off. But for the most part, it's either sideways or up in this current market. So I would like to get a little bit better at bigger picture ideas. All my swings have been actually probably my better trades lately over my day trades. So that kind of says something about the current market. But that is it for the prep. One thing I want to talk about, I think I mentioned it before, I don't remember. Mike B, you've got the Icon meals for this week. So email me, webmaster@investorsunderground.com, and we will ship you out a box of food from Icon Meals. Todd always does that for us once a month. On that note, while I have your attention, well, first off, all you have to do is leave a comment. Leave a comment in the in the comment section of the YouTube video, and each week I will pick someone for either IU chat, for scans, for Icon meals, or for a t-shirt, as you've seen. So that said, we typically do a Traders for a Cause, like a gala, locally to me. This year, decided not to do it. Just been many years in a row. And, you know, with COVID and all that kind of stuff with the holidays, after Thanksgiving, it turns into like a big petri dish. So, decided not to this year and just to kind of relax and breathe for a minute. However, I still want to do good things into the holidays. So, one of the people that usually comes that supports us quite a bit, one of his best friends is starting cancer treatments, chemo, on Monday. And so he had reached out about maybe getting some food and you know, taking that off her mind, so she doesn't have to worry about that on top of feeling like crap from chemo. So he had reached out to me, I reached out to Todd, and we decided that we're going to do something. If anybody would like to participate, whether it's $10, $20, $50, doesn't matter. I'm going to have a link in the description. It's just going to go to Traders for a Cause, and anything that we don't need will just be donated to BCRF. So Todd is going to come in and sponsor a good portion of that. I'm going to sponsor some of it. My friend Pat is going to sponsor some of it. If anybody else would like to participate, by all means, there's a link in the description. Again, no amount's too small, and anything else that we don't need for it over her 5 weeks of chemo will just go to BCRF, Breast Cancer Research Foundation. So let's get right into the week ahead. All right, guys. So first and foremost, I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're okay with that, leave it on, and let's get to it. HTGM, another cheap one. Assume halt risk, assume swipe risk, but higher the better. This one popped after hours, typically does that sort of move, especially if particular groups are involved. Usually see some after hours moves on these types of trades. It's something that kind of happens. They go sideways during the day, and then all of a sudden they pop after hours. This gave a great opportunity intraday. You guys saw, for those that are in the room, my short at 74, and then it flushed out, nice 20 cents per share. Ended up holding exceptionally well throughout the rest of the day. You can kind of see, and this is the same kind of situation that you saw with PHVS and AMAM, SMMT, where, yeah, you know what? It is breaking down, but you know what? It's also holding at that 52 level. Sure, there's a couple swipes or flushes under it, but overall, 52 is holding, right? So that is good information. I'm not saying that you could have anticipated that that move was going to happen after hours, but what I am saying is you can anticipate that, hey, maybe it's not good to be fighting this thing on the short side when you have a nice little support system, you know, starting to firm up at 52. And, you know, you saw that on AMAM right over here, and it's kind of difficult to see because of how high it went. But, you know, same deal. And you can see, you know, in this range, every time it flushed down, they brought it back up. Flush down, brought it back, flush down, back up, flush down, back up. And then this last one, which was right off the open, flush down, back up. And even after that, you know, it never looks back after that confirmation at this level. And we were talking about the 120 being key. And the reason we came up with that level is you can see each time it's busting up against that level, come back down to the 110. Up against the 120, back to the 110. And the more times it does that, the less edge there is until it breaks one way or the other. You can have plenty of downside after it breaks down. You can have plenty of upside after it goes to the upside. But at any rate, in a situation like that, number one, obviously you don't want size. Number two, swipe risk is built in. Number three, avoid it if you're unfamiliar. But I know I saw some crazy, reckless type trades. This is all in your control. Sizing is in your control. And in this market, when you know this is potential, that's how you keep your risk in check. I understand that if you're sizing in and you have a particular, your normal size, and this happens, you know, unless you're perfect, you know, your stop hits and everything's good, There's a lot of risk there. But the problem is right now, we know in this market that swipes is a real risk. So your edge in your risk management comes down to your sizing. So just make sure that you are taking that into consideration. But, you know, likewise with SMMT, over the last couple days, you know, you can see the base even right here, right? In 350s area, 360s area, you can see the same base over here, and this was the 250, 260 area. And that's the reason why I was long versus the 260 level. And then again, you see it over here, the 210s. And you just need to keep looking for that kind of thing. And when should it have died? Didn't die. So am I too sized? And you have a little bit of time before it's too late. But if you don't take it off, or if you fight it, then it quickly becomes too late. Same deal over here. PHVS. This was the levels that we put in the room, 420s and 440s. And again, no I told you so's, no hindsight. I could have traded this thing better. Everybody could have traded this thing better. But what were the signs and what was said in the room? 440s, 420s. And at this stage right over here, guys, there is no edge. So if you're fighting it, be cautious. If you did not proactively cover into the 420s, be cautious. And, you know, when you see these things happening, I know what most people tend to do because I used to do it all the time. That's why I was a broken record on this one. That's why I was broken record on all the other ones this week, including SMMT, which I actually got long. But the other ones I did not get long, unfortunately. Still have work to do. But anyway, HTGM. Higher the better. Kind of went off on a tangent to explain the price action you should be looking for, but you should be familiar with it with the RMED. If you remember with another tangent, right? If you remember the original thesis for the long idea on RMED, we had basically 280 support. And what was it? 305 was the trigger that I had written. So you can see each time it flushed down, it got absorbed. And then you find that top. When the top now becomes, whoops, it should have been 305. There we go. Now when the 305 becomes the base, then it starts to open up to the upside. So anyway, same thing that you guys have seen over and over and over again. It's just about applying it. And again, none of this is I told you so. I personally can trade these things a lot better. I'm just putting out there what exactly is happening, what we're seeing, what we talked about ahead of time. But again, that doesn't mean that I got long. But what to know to avoid, what not to size against, what not to fight is half the battle in some of these trades. So that said, HTGM, higher the better, reactive trade. Maybe it just blew out after hours. We'll see. But I would say the first area of interest is that 80 level. They kind of based it after hours. So we'll see. But ideally, we get some sort of blow off over into the ones. That would be great. But otherwise, I would be cautious until you see 80s fail, 80s fail, 80s fail, and start to break down, right? Not 78 and then swipe back to 85. 80s continually fail with exhaustion moves, right? We need to see the failed follow through. Momo, higher the better. This one is going to be kind of like an XPEV situation. Ideally, we get 30, 40, 50, 70 cent move and then starts to fade off. I'd love to see that. Really nice breakout trade there, much like, you know, Hua and all these other ones that we had been monitoring. I had mentioned that I felt like we're going to be in this like little quiet bull market in the China names, and that PDD and FUTU and JD and all that stuff would trickle down to the smaller caps. Now, you know, these are billion-dollar companies or $500 million companies. They're not necessarily small caps, but trickle down to these, and then it might even trickle down to some other ones, which I have on the continuation section. Last but not least on the main watch is XPEV, nice bell-to-bell kind of fader. I always watch this one, NEO and LI, of course. So nice faders. Unfortunately, did not participate in those, but I will continue to watch, possibly start to fade back. Sometimes you get this, you know, all right, we finally hit bottom, we're going to the moon. And it's just because it's just huge short squeeze only to come all the way back down. And what do I mean by that? Look at AMC, right? How bullish was everybody right over here? Huge bull setup, only to exhaust out and unwind right back to where it came from. So my point being is that what we're doing with XPEV? We'll find out. But don't get too bulled up. Always respect risk in this current market environment. All right, other than that, failed follow-through section. We've got GRWG. This one's been great so far. Participated this day. Unfortunately, didn't go back, but I've been watching it versus this VWAP level and kind of see what happens with that. SMMT. So far, it's been a crazy squeezer. This is a situation where everybody's waiting for the same thing. So is there an edge? Is there an edge of you trading it off of open, trying to do the same thing as everybody else? The answer is no, by the way. And so, you know, sure, if there was a huge gap in some sort of reactive trade, absolutely. Maybe there's an edge with that. But you've got to wait until things start to kind of settle off. You have to wait for the crowd to go away to get that edge back. And right now, the crowd is, you know, there. And the volume is going to start to fade off. And they still are being very, very aggressive against shorts that are staying put. It's not to say that it won't completely unwind. When this does pull back, it's going to be down, 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 and you're going to be having trouble chasing it lower and lower and lower, just like something like AMC. But in my opinion, that is likely how it's going to end. After it blows out, it's just going to be down, down, down. Each day, you're going to have to chase, you know, a 20-cent pullback to really take advantage of it. But that said, cautious. Everybody has the same plan as you. So if everybody's doing the same thing as you and it doesn't work, it's going to stay up longer than you think. You have to remember that. AMAM, ideally a nice reactive trade. We'll see what happens. This is nothing that you really want to fight. You know, so far, you know, after hours, I don't ever like to really use after hours as sort of, you know, like okay, it closed weak, so it's over, the squeeze is done. Because you never know, they could just be retrapping, right? So I'd be watching 350s, 380s as that anything over 380s, ideally exhaust out. 350s, you might have nice patience for an unwind. Anything above, be cautious. It could, you know, circuit halt at any time. Anything below, you need to see continual, you know, retest of prior support, which has become resistance, and then potential fade off from there. But be cautious. CLRO, another one that just got a little bit of the momentum. You know, this should not have even probably been up there. It's got a lot of volume, a lot of action because of SMMT and because of AMAM. You know, nobody would even be probably thinking about trading this move or this move if the other ones weren't, you know, making a bunch of noise. So keep that in mind. Be cautious. But I do think that we could be fading back to $1. I'd love to see it kind of push 140s, 150s, and then start to fade off. So we'll see what happens with that and go from there. Other than that, we've got Rent. Rent, I had a nice short overnight, gap down, flushed out, and then it started to rally back. And I participated in it a few times, you know, this push, and over here. And each time it flushed out, and then it came back to my entry. So, you know, just more pushing buttons than making any money, really, there late day. That said, it is one of those kind of reversal trades that we talk about. And so if weak opens get absorbed, stop thinking that it has to fade back, right? We're not in a market where everything is just, you know, ramping up and then fading back over the next couple days. We are in a market where things are getting absorbed. So be aware of that. That's not to say it won't unwind, but if it hangs around, understand that things are getting absorbed and heading higher. Other than that, on the continuation side of things, ERNA, low volume type trade, liquidity type situation. Dips got bought. That's why I got long on Thursday, and I sold some on Friday. I will continue to add if it continues to grind, but I like the potential. If it starts to fade off, forget it. ISIG, same deal. I have a position for now. I was thinking that it could be like 9. We've already talked about this, but again, I want to be proven right. So right now I've got a little risk on, but I need to be continued to be proven right. See it go to the next level, add. Otherwise, not going to play with it. CYYD, nice recent reverse splitter. went off and had a nice little move. So watch a week open. If threes start to base and it sets up for red to green, we got a potential trade there. KTRA. So far continues to go. I will not long this, but I'm watching for the potential of, 15, 20 type of blow off, and then maybe we get a nice $5, $6, $7 fade. So be cautious. This is a great liquidity trap example. This is a great, the gap up volume day. The dip got absorbed. Then we get the wicks that we talk about every single day. On these Sunday videos, we always talk about longevity, wicks leading to longevity. We talked about it on 9, all these wicks getting absorbed. And, you've seen how it's, hung around a little bit longer than you might expect. Last couple, NMTC. Again, you can see the wicks getting bought up. This one had a huge save on Friday. Came off nothing, up, 80 cents pretty quick. Just monitoring that one. DOYU, same deal. This is another one of those where I feel like maybe the China momentum starts to come to even the smaller of small caps. And when I say small caps, this I think is a $500 million company too, or a couple $100 million. But at any rate, they move like they are small caps in the China basket. So last but not least, NIU I've been monitoring for the day that it wants to fade. So again, these are all just kind of watches on the continuation side, not necessarily something that I would take long. I only have, I guess I have a couple longs recently. I've got ERNA that I talked about. I've got put on a few SFT just in case. I've got REBN, which is a nice little poke and good volume day. And then TSHA, which had like a little bit of a liquidity action this day, and then it hasn't gone away. I don't love this one until it gets over this 240, 250 level. But once it does, if it does, we might have a nice little breakout. So nothing I'm too excited about on those, but at the same time, be patient in this market. Remember, your edge is sometimes not trading these things or just not sizing aggressively. You don't have to size off the open. Let things figure themselves out. You don't have to try to figure it out. Let it happen. 9:45, 10 a.m. plus. If it's not breaking down, if it's continually testing support and it's not breaking or it's trappy, that means put the brakes on. Stop sizing. You've seen it every single day this week. And so you should assume it's going to happen Monday and Tuesday. Let it prove that it's not going to happen, and then you can continually, scale in and size in from there. But for now, if you're going in thinking that tomorrow is going to be different, the next day is going to be different, you just had 5 days in a row the same stuff. So until that settles, relax. Multi-day runs are back. That's it. And again, there's going to be a link in the description. I would love for you guys, if you want to participate in any capacity, whether, look, even $5. $5, $10, $20, $100, whatever. But we're going to try to make a difference here for the holiday for my friend's best friend that is starting chemo on Monday. That's it, guys. We'll see you in the room tomorrow, and have a good rest of your weekend.